When is the housing market going to crash? Why is the housing market so hot? How much over the asking price should I offer on a home in 2021? These are just a few of the top Google searches over the last few weeks that have increased exponentially. So in today's video, we are gonna go over the median home price in nominal terms to see where we are in the market cycle. We're gonna take a look at real estate prices adjusted for inflation to try to determine if housing is cheap or if it is expensive. We're gonna give you an interest rate update. And of course, we're gonna circle back around to the Sacramento market, and we're going to talk about all of the stats and facts to try to determine what folks are offering on properties today to get under contract. So if you are in this market and you're actively looking to buy or sell, this video is for you. Welcome to Macro Thinker. If you are new to the channel, please consider smashing that like button to help push this content to more people, and tap that subscribe button to see more weekly videos on finance, real estate, and investing. My name is Lewis. Let's get it. Okay, so let's jump right into it here. Up on the screen, I have a chart from the St. Louis Fed for median sales price of homes sold in the United States. Now, this chart goes all the way back to about 1960, and it shows the actual dollar amount of the median home prices sold. And as you can see, average home price sold in 1963 was about $18,000, and it's basically gone up ever since. But what I want to bring your attention to is a couple things here. First, I want to take a look at where we were leading up to the great financial crisis, which is where housing peaked in 2007, with the median home price sitting at $257,400. From there, prices obviously came down for a few years, bottoming out somewhere in and around 2011, 2012, with a new median home price of about $224,000. Since then, we have had about a 10-year bull market in the price of real estate, and it has gone up, reaching a new record high in fourth quarter of 2020. It's even higher now in 2021. We are at about $347,000 as the new median home price. Now, I want to point out that this is in nominal prices. So if you are looking at the home prices across the United States, this is a national average and the actual dollar cost of those properties. The reason I'm emphasizing this point is because the next chart I'm going to show you is real estate prices adjusted for inflation. We've switched charts, and now up on the screen we have real residential property prices for the United States. Now this is adjusted for inflation, and what they do is they're looking at all the existing home sales in the United States, and they're deflating those figures using the CPI, which is the Consumer Price Inflation Index. What I want to point out specifically here is that there's different peaks and valleys over the span of the last 5 decades. And you can see here that in 1973, homes were on the expensive side. In 1976, they got cheaper. 79, more expensive. 82, cheaper. 89, expensive. 95, cheaper. 2005, 2006, expensive. 2010, 2011, 2012, cheaper. This chart only goes to 2020. However, 2021 we know is higher, and it's getting to be where it's more expensive. But what I want to point out is that even though in nominal terms the median home price is the highest it has ever been, in real terms we still haven't reached the peak that we saw in 2006. So this is probably an indication that we still have more room to run before we revert to the mean. And when I say revert to the mean, I'm talking about the different peaks and valleys in the market that we see over history. Now, it doesn't mean that it's going to happen soon, but history shows us that eventually what goes up must come down. Now, I want to be very clear. Just because history shows us that property prices will revert to the mean doesn't necessarily mean that the prices will go down in nominal terms. So what do I mean by that? Let's say the median home price today is $345,000, and that's in nominal terms. Even though adjusted for inflation, we're not at peak levels. Let's say CPI runs hot, and we know that the Fed is going to allow that to some extent here in the future. Now, with the rising inflation brings rising wages. So let's say on average, income goes up by 10 or 20% over the next couple years, while housing prices stay flat. So if your median home price stays at $345,000 and wages rise, well, in real terms, prices have actually come down. That's a very important distinction to make, because I'm not out here saying that we're going to see some big housing crash. However, history does show us that prices will eventually revert to the mean. The question is, are they going to revert to the mean in nominal terms, or are they going to revert to the mean in real terms? Anyway, it's very important to think about that and think through it, because those of you out there that are maybe waiting for this big market correction, this market crash, because of all of the manipulation we're seeing in the market from policymakers and money printing and interest rates being held at record lows, we may not ever see that big drop like we saw in 2008, 2009, 2010. Which brings us to our next chart, which is the 30-year fixed average mortgage rate in the United States. Now, I've showed this chart on prior videos, but it's important to bring it up again. We are still hovering at all-time record lows. This chart looks like it goes in a little bit to 2021, but what I want to point out here is that if you're looking at the chart as a whole, you can see that rates have actually peaked in right around 1981, and they've basically done nothing but go down ever since. And so we are, let's see, at the low in 2020, we were sitting right around 2.75%. Actually, I think it was a little lower than that, right around 2.6. And now we're kind of hovering back up around the low 3% range. So anywhere from 3% to maybe 3.25%, depending on how you qualify. And that is 30-year fixed rate debt. My point here is that even though rates have gone up a little bit, the debt is still extremely cheap. We're still hovering at all-time record lows. And if you're looking at making a purchase, I would lock into fixed rate debt only, whether that's a 15-year, 20-year, or a 30-year. And this is a great way to effectively short the dollar. And what I mean by that is because if consumer price inflation is running at, let's say, at least what the government tells us, 2 to 2.5%, but you're borrowing at 3%, in real terms, that debt is basically free. It is not costing you anything in real terms. If we are digging into the CPI, which we can maybe do on a different video, the way they measure their basket of goods is slightly flawed in my personal opinion. If I was just to guess, real inflation is probably more like 5 or 7 or 8% or something, especially right now, just based on my anecdotal evidence, which is like going to the grocery store and seeing the price of different goods and services. They are definitely more than 2% higher than they were a year ago, if you ask me. And what's interesting is that if you're borrowing at, let's say, 3%, but real inflation is 7%, the delta of 4% is a transfer of wealth to you. So you are effectively using that debt to your advantage to help you build your wealth. Okay, so now let's dig into the Sacramento market. Let's find out what's going on. Let's see what people are offering. I have up on the screen an article from Sacramento Appraisal Blog. This is ran by Ryan Lundquist. He provides amazing stats, amazing facts, and great data. If you haven't seen his website in the past, I would highly suggest that you do that. I will link to it in the show notes. And I just want to go ahead and run through parts of this article and point out some fascinating data. So this article starts off by saying the housing market is chaos, which is kind of true. So number one, he's saying prices are insane. We've seen enormous price increases lately. It's mind-blowing to see 20% increases because the market was really slowing down in recent years, which is true. If you go back to 2018, 2019, we actually saw things slow down and soften a bit. Also, the median home price in the region is up nearly 9% in 2 months just from January alone. He has this chart, which I thought was very fascinating. I'm going to run through it with you, but it's the Sacramento region housing market. And for Ryan, he puts this together with Sacramento, Placer, Yolo, and El Dorado County. Just single family residences, no condos. And it goes back a year. He's just doing a year over year comparison. So median home price in March 2020 was $440,000. We are now at $528,500. It is a 20% change in a 1 year period. Average price $480,000. in March 2020. In March 2021, almost 590,000. Price per square foot in 2020 was $252. We are now hovering at about $300 a foot, 18% change. Number of sales, there was nearly 2,000 sales in March of 2020. We are actually up about 11% with about 2,200 sales. Cash sales basically stayed flat, 13% to 14%. It's about a 9% change. Now, inventory is down drastically. We have 61% less inventory in a year. We were at about a month and a half supply. Now we're down to 0.6. And average days on market was at around 36 days. Now we're sitting at 17 days, which is more than a 50% reduction, which means homes are selling incredibly fast right now. Now, the next thing that I want to point out, which I thought is really fascinating, is he has listed the stats and facts with regards to offers made. Offers made in 2020, 5,142. In 2021 so far, we've had 11,438 offers made. That is 122% change. So people are out there having to make more offers in order to get homes under contract. Because if you look at the closed sales, we're only up about 10%. So we sold last year in March of 2020 about 2,000 units. In March of 2021, we've sold 2,200. It's only up about 10%, yet people are having to make twice as many offers. Average number of offers per listing was 2.57. We are currently sitting at 5.2 offers per transaction on average. That's up 102%. And then the last chart that I want to point out in this article, which I think is incredibly insightful, is that Ryan has tracked the data for what people are offering above the list price. So let's take a look at this. So Sacramento region, this is March 2020 versus March 2021, just like the other charts we discussed. This shows the number of homes sold below the list price. March of 2020 was 13.3%, and today we're sitting at 6% below the list price. So not very many homes are selling under the list price. Sold at the list price, we were at 45%. Now we are at 21%. Homes sold 1 to 5% above the list price. We were at about 36%. Now we are at 33%. So less homes today are selling between 1 and 5% above the list price. Now, probably the most interesting piece on this chart is this next one. Homes that have sold between 5 and 10% above list price. We were at about 5%. Currently, we are at 26%. That means that if you have a home in the Sacramento region and you've listed it for $500,000, there is a good chance that you may get 25 to 50 grand over your list price. And then the next one is pretty fascinating as well. This is 10 to 15% above the list price. We were sitting at about 0.85%, but today about 10% of those homes are selling 10 to 15% above the list price. So not as common, but that is an incredible jump year over year if you're looking at it. The reason I'm sharing this information with you is because if you are a buyer or a seller in this market, you really need to understand what is going on and figure out what to expect. If you are a buyer and you're looking at a property, let's say it's priced at $499,000. Let's say the listing agent priced it correctly, and it's in a great location with good schools, and it's going to drive a ton of activity. The odds are that that property will not only receive roughly 5 offers, but it's highly likely that that property will go for 5 to 10% over the ask price. Now, doesn't mean that every home listed will go 5 to 10% or higher over that price. So you need to lean on your real estate professional to understand the comps and to understand what's going on with that property. They need to be highly engaged. They need to be reaching out to those listing agents to see what kind of offers, what kind of terms, where they are price-wise, so that you as the buyer can be extremely competitive. But again, you do need to be aware, because if you're a buyer and you see something listed at, let's say, $499,000, you may need to go in with the expectation that that home may trade at $525,000 to $550,000. Now, if you are a seller in this market, the same goes for you. If you are looking to sell and trying to reach top dollar, first, you want to have your agent really analyze those comps. You want to know what homes are trading for and price it accordingly. You don't want to just throw out that dream number. And the reason you don't want to throw out that dream number is because buyers are really savvy in this market, and so are their agents. They're looking at the comps, they're looking at the data, and they're figuring out what the home is worth and what other homes of similar size and quality are trading for. So make sure that you dig into the numbers, you price it correctly, and if you're in a great location, priced correctly, good schools, the whole 9 yards, you're likely going to get a ton of traffic. And then it's up to your listing agent to drive that traffic, set the urgency, and try to get you the best price possible. All right, so that is going to wrap it up for today's video. We talked about the median home price in nominal terms. We talked about the median home price adjusted for inflation in real terms. We talked about mortgage rates, and we went over the stats and facts in the Sacramento market. I hope you found this data and information useful. If you have questions or comments, please leave them below. And as always, I really appreciate you taking the time to watch this video. If you haven't done so already, please consider smashing that like button to push the content out to more people, and tap that subscribe button to see more weekly videos on finance, real estate, and investing. Thank you again. Take care.